Hi, everyone. Those of you who don't know me, I'm Jesse Mackey, the Chief Investment Officer of Forethought Financial Group. We're an independent SEC registered investment advisor based in Syosset, New York. And for those of you that do know me, I hope you like my new self-inflicted coronavirus lockdown haircut. If this goes on too much longer, unless you live with a hairstylist, you'll probably end up looking just like me. So today I want to talk a little about investing in bear markets. A lot of people are now asking the question, is a bear market a good time to invest in stocks? Well, the answer really depends on the individual investor's situation, but the short answer for the long-term investor is yes. Here's why. A bear market is usually defined as a 20% or greater cumulative decline from a record high price. So while the impact of a bear market on an investment portfolio causes short-term pain for people that already own stocks, it also offers an opportunity for long-term investors that may only come along a few times in a lifetime. Now, global stocks have moved deeply into a bear market during the coronavirus pandemic and are experiencing historically high volatility. And historical statistical analysis shows us that once a bear market is confirmed at that 20% drop threshold, the average time to the trough of the cycle is approximately 5 to 6 months later. The average additional loss is approximately 16.72% from the bear confirmation point, although both the actual time to the trough and the additional cumulative loss can vary pretty widely depending on the time period referenced. So for long-term investors, this window has historically been a very opportune time to deploy any excess cash accumulated in bank checking and savings accounts that's not needed for short-term expenses or savings goals, and also is not needed to supplement household living expenses in the event of a temporary loss of earned income, which is a problem a lot of people are obviously facing right now. So while you shouldn't expect to reap quick short-term gains, this approach is historically likely to produce a substantially improved internal rate of return in the long term once the financial markets eventually re-achieve and then exceed their previous record prices. So for any investor that does not expect to need to fully liquidate their portfolio assets for short or intermediate term use before the markets can regain their prior peaks, which could potentially take an extended period of years, then this bear market represents an opportunity to buy equity assets at deeply discounted prices, substantially cheaper than they were just a few weeks ago. So of course, long-term investors should consider whether and how to implement a plan of cash investment based on their particular financial situation. And you want to make sure to discuss with your advisor whether this is applicable to you before taking any actions with regards to your financial plan or your investment portfolio. So if you'd like to discuss this with us at Forethought, you can contact us at info@4tfg.com or at 516-300-1617. Stay safe and put off your new haircut as long as possible.